Hello and welcome. I'm Patrick Curtis, your host and chief monkey, and this is the Wall Street Oasis podcast. Join me as I talk to some of the community's most successful and inspirational members to gain valuable insight into different career paths and life in general. Let's get to it. In this episode, Matt shares his impressive path from UPENN as a biology major to equity research at Morgan Stanley. Learn how he managed to make an internal lateral move to Morgan Stanley's Tech IB team, how that opened up the opportunity at Khosla and venture capital, and how he approached starting his own business. Finally, learn why Matt ended up back in the corporate world as the head of Corp Dev at ServiceNow and why he recently pivoted to the head of strategic finance. Enjoy. Okay, Matt, thanks for joining the Wall Street Oasis podcast.
Thanks for having me, Patrick. Happy to be here.
So it'd be great if you could just give the listeners a short summary of your bio.
Sure thing. So born and raised in Long Island, New York. Went to college on the East Coast in Philadelphia, University of Pennsylvania, where I was a biology major, and ended up actually going to Wall Street after college. Made a big career shift mid-college and decided I wanted to get some business experience before I made any long-term decisions like go to med school. And started off my career at Morgan Stanley. And then I went on to Khosla Ventures where I was a VC for a few years. Made a shift into entrepreneurship after that, decided I thought it'd be a great idea to try my hand at starting a company. Saw a lot of really great entrepreneurs at Khosla. And so tried striking out on my own and learned a lot from my entrepreneurial experience. And then after a few years of that, right-sided again and moved into a large public company. So work at ServiceNow, doing M&A and venture investing. And most recently actually moved into the finance organization just a couple months ago, where I now lead all of sales and marketing finance at ServiceNow. And I should say I live out here in California, based here in San Francisco.
Can you just tell listeners what is ServiceNow for people who don't know?
Yeah, so ServiceNow is a enterprise software company, public enterprise software company. We focus historically on IT service management. That's our core business. So think about for really large enterprises, they have large IT organizations to serve their tens of thousands of employees. We are the software that helps inventory, manage, and service all that IT. And believe it or not, that's a massive market. We do billions of dollars in revenue just in that core area. We've broadened into various other businesses as well over time. We provide a customer service management software product. Think about things like Zendesk for the enterprise. We do that. We also have some HR service management products as well. So the same way you could file an IT ticket, you can file a ticket related to HR issues and a bunch of other things. And it's about a $100 billion market cap business today with about 13,000 employees based out here in California.
Amazing. So let's start all the way back at your undergrad. So you're biology. So you're thinking pre-med, medicine. Why? Is your family in medicine?
I have an uncle who's a radiologist who I'm very close to, and I had always admired as a kid. I was always passionate about science and technology and liked science back in 8th grade bio. And I thought being a physician would be super fun. And so that's where I pointed myself when I got to college.
And so Penn was just too finance oriented. You couldn't, you drank the Kool-Aid and everyone was like going and recruiting for investment banking. And
that's a great point. Yeah, that's a great point. I mean, certainly that definitely had an influence. Wharton, I would say, as an undergraduate business school, and I had all these friends and fraternity brothers who were going into investment banking and wanted to know what it was all about. And so went to a bunch of on-campus recruiting events, learned a bunch, and got interested that way.
So when you joined, I mean, you graduated in a pretty tough year, 2008.
Yep.
Pretty bad year to graduate in terms of job prospects. Tell me how the whole job at Morgan Stanley kind of unfolded. So you were in equity research, right? Is what you started out with? Yeah,
that's right.
So tell me how that even transpired. So
Sure.
At what point did you have a summer internship with them, or were you late to the game? Tell me what happened.
Yeah, it's a really good story, a story of luck and fortitude, I'd say. So actually started with those initial on-campus recruiting interactions where I met a guy from Morgan Stanley who was the head of Morgan Stanley Equity Research Recruiting, who had gone to Penn, who had been a French major and had transitioned to equity research. Really great personality, interesting, friendly dude. And I said, wow, this guy's kind of like me. He made a transition from liberal arts major into finance. Like, how did that work? And I met him at an event. I got his card. I just started following up with him, shooting me emails, got on the phone with him, and just wanted to learn more about his experience. And then when it came time for them to pick resumes, I actually didn't get picked to get an initial interview. I followed up with him that day and said, hey, I guess it didn't work out. It was great meeting you. And he said, why don't you come by later today, and we'll try and squeeze you in. Ended up squeezing.
Why do you think you didn't get picked? Because you're a biology major?
Yeah, because I was a biology major and had no finance experience. I think I'd maybe taken finance and accounting 101 at that point in time to show my interest, and also to learn about what I was talking about. Mm-hmm. Ended up in an interview with him, as well as another equity research associate who had also gone to Penn, who was the sister of some girl I knew from a studying abroad. And it was just this crazy confluence of knowing people. And, I guess I did it well enough in the initial interview that I got final rounds in New York. And at that time, I should say also, like, I didn't have strong finance and accounting background, but I had really strong industry interest. And I was really interested in technology. And I had read a bunch of The Economist, read a bunch of the Wall Street Journal. I was really up on kind of what businesses were doing technology businesses were doing that were unique. And so I had that kind of fodder to talk about why I was passionate about being a stock analyst. And they bought it, and I got an internship, which.
Tell me about that. So you were well read on a specific, tech, clean tech, whatever it was. Did you feel like you could pull enough from those publications to sound intelligent, or did you feel like you were overselling it sometimes in the?
I felt like I actually did know a lot, and I was pretty well read on the subject matter, and I think more generally just about industry trends. I think what gets lost, I think, when you grow up and you've got a job, you get very specific and you get very narrowly focused, and you sort of lose focus of industry trends. And I was just very well versed on industry trends and where I thought the world was going. And when you can sort of like spar with people on that stuff, I think it really, looking back, I think that really resonated, that like I was able to talk about, like, with a semis analyst, the influence of China and how that was going to influence semis markets, and like in clean tech, how regulation was going to impact future growth drivers in oil and gas markets and clean tech markets. I think, whether I was right or wrong, I don't know, but I was opinionated, and I had facts to support it. So, I think at that point, being a 21-year-old kid, I think that it made an impact.
Did you specifically target technology or clean tech and semiconductors on purpose, knowing that there was a role there or an opening there, or did you, like, what was the thought?
It was a personal interest at that point in time. It's something that I was passionate about. If you remember back in sort of 2007 timeframe, there was a lot because there was a lot of talk in public media and pop culture about climate change. Al Gore was sort of big front and center, and I was personally interested in it, and so I'd read a bunch about it, and so therefore I wanted to work in that area.
Okay, and then so when you were interviewing, and it sounds like you got a little bit lucky. Did you, in the sense of you had that interview with both the guy that you had been chatting with and networking with, yep, and the girl who you kind of knew through a friend. Yeah. Tell me a little bit about, but you still had to do well on the super day.
Yeah, that's right.
You still had to get through.
Yeah.
Tell me a little bit about just the internship then,
Sure.
following summer, where was it like purely an equity research internship?
It was.
Mm-hmm.
Yeah, it was an equity internship. At that age and with my skill set, there wasn't a whole ton of value I could frankly add to the organization. And it's more, hey, the team will find some administrative tasks for you to do. And what's also important about equity research is teams are very, very small. So, versus an investment banking team, you may only have 2 or 3 people between, junior and senior that are responsible for covering stock names, talking to investors, creating research reports. And so your impact can be really materially felt if you go out of your way. And I think at that age, it was just about like being passionate and being willing to like stay late, work hard, and do whatever people wanted, and get people to like you, honestly. And saying like, this guy is really smart and wants to work hard, or guy or gal, I should say, is smart and wants to work hard for me. Mm-hmm. I wasn't running any models. I wasn't writing research reports. But where there was an analysis here or there where it's like, hey, can you help dig up like these stats, or like tell me what we should think about this trend, or tell me what you think about this company. That was really it. The internship culminated in so there was like kind of one-off task, and then there was this final project we had to do, which was give me a stock pitch, and that stock pitch had to be presented to the senior most leader of equity research at Morgan Stanley, and so I had to put together a pitch based on some industry data, valuation data, and I made my little presentation, and I guess it went well enough that I got the full-time job offer.
What are your tips? Did you have to do like the typical valuation? Like, did you run a DCF? Did you do trading comps and precedent transactions for that?
I did not build a DCF. I don't think I really could have built a DCF at that point in my life, but some basic multiples math, like how a stock was trading versus versus peers.
Okay, and it seems like it went okay. Do you any tips for doing that for interns in terms of how to do it? Were you nervous when you were presenting it?
I was incredibly nervous. And
do you remember what you pitched? Do you remember the stock?
It was one of the coal stocks. I was actually working for a coal analyst that summer, I guess it went well enough. I think what's super underrated in terms of being great, really in any job where you're have to present, is presentation skills. And I don't know if I was a great presenter then. I think I was a good enough presenter then. I think it's something actually that gets lost on, in a lot of, business training, is how do you present and communicate yourself? I think it's something that I was always willing to do. I don't think I spent a lot of time thinking about my capabilities and professionalizing my presentation skills, but it was crucially important, in terms of like how I dressed, how I spoke, not only what was on the page, but how did I present it? What were the key ideas I was communicating? I think that was super important. And ultimately, being a research analyst was very important, that you could communicate effectively. You're telling salespeople, you're telling investors what they should buy or sell and why. Like, that is the job. If you're great at that, you will excel at it. And so presentation skills were very important. Sure, you have to have like the core capabilities of like, how do you value a stock? How do you think about one stock versus other? How do you think about sectors versus others? Like, that's all in your head, but how do you communicate those ideas effectively, I think separates, good from great.
So you made an internal transition at Morgan Stanley.
Yep.
From equity research to banking, to technology banking.
Yep.
So you were in SF office and you started how to commute down to Menlo.
Yeah, that's right.
But tell me a little bit about why, number one, how you even pulled that off, because I know it's
Sure.
probably not easy to make the internal transition. And number two, what the switch was like. Did it go from like 70-hour weeks to 100, or was it, what was that like? And why did you even want to do that?
Sure. So I realized that I was interested in this whole finance business world, but like being a stock picker long-term was never really my ambition. I wanted to get like some good finance/business training and experience, but I was like, I can sit around here for a little while longer and keep learning, but like, this is not pointing me in the long-term right direction. And so investment banking was this tool that was going to unlock all these long-term opportunities for me. Ultimately what I thought on the buy side, but it turned out to be, broader than that, to have both the training as well as I think the pedigree and stamp that would allow me to do lots of other things in finance. And that was really the ambition.
Looking back, is that true?
Absolutely. I was terrified to go work in investment banking, and I heard horror stories of working till 2 a.m, 7 days in a row, and blowing up weekends and holidays. And I was like, this sounds scary and terrible. I don't want to do that to my life.
What were you working? What were you working in equity research? What were your hours then?
In equity research, I was never working more than 50, 60 hours a week. And if you're in front of the computer for 12 hours a day, like, you're not cranking the whole time. Maybe you're watching the stock screen, talking with your lead analyst about ideas. There's a difference between sitting and being at work for 12 hours and like grinding for 12 hours, which is what you do in investment banking.
Well, sometimes in banking, it can be a slow day during the day, and then you have to be there all night.
Not in the Menlo Park Tech Banking office.
They're busy.
Morgan Stanley. I can't remember a single day where I sat on my hands for more than an hour. So it was an intense environment.
But how do you even pull that off? Because
how did I pull that off?
Yeah,
So
how'd you get in
I
there?
pulled a rabbit out of the hat there too, Patrick. So I really wanted to move to the tech banking group. I knew that was a really highly regarded group inside Morgan Stanley. It obviously leveraged my tech background, which I wanted to continue to do. It was in California, which is where I lived and wanted to be. And so I reached out to internal recruiting. I said, I want to go work in that group as an analyst. And they said, well, there's no hiring going on right now. Okay. A month later, I want to go work in tech banking. There's no one hiring. You can't put you over there. Okay. I went out and I got a job offer from another bank, and I went back to recruiting and I said, hey, I want to stay at Morgan Stanley. I told you that 3 months ago. Can you, I'm going to go leave if you don't give me an offer. And within a week, I had an offer at Morgan Stanley.
I love it. It's a very good lesson.
Yeah.
It's a very good lesson.
It was risky as heck and scary. And I couldn't.
Can you tell me where you got the other offer?
It was at Lazard. And
in SF? In SF,
yeah. The MD sat across from me, and my interview went really well at Lazard. They clearly had a need. They liked me. And in my first round of interview day, the MD sitting across from me said, look, I think we're going to get you an offer. And what we really shouldn't do is you shouldn't go back to Morgan Stanley and try and leverage this, because by the way, if they do that for you, you can't trust those guys. I was already countering and anticipating I was going to do that.
Oh shit.
And he was right. And that's what I did. And it worked.
Oh my God. That is scary, man. That your heart must have been pounding when they were like,
yeah, I wasn't ready for that type of pressure and stress. I wasn't even really sure what I was doing. I think probably at 25 years old, but I had an instinct and it worked.
But it's really good. You were told no 2 times or 3 times before you went.
At least 2 times.
At least 2 times.
Yeah.
And they just said there's just not a need, even though there probably was if all the analysts were drowning.
Yeah, right. That's right.
They just didn't want to bring somebody in from the side, lateral.
At the end of the day, I don't I never really got to the bottom of what was going on, if they really had a need, or if it was an ego thing of we just can't lose people to other banks. I think in investment banking, they're people are fiercely competitive about losing people to other banks. I just that happens to be how they are. And I think that perhaps
it probably what it does, it created some sense of urgency. It was suddenly not, he's just going to be stuck in ER, but wait a second, is this guy good? And then they maybe talk to the people and they're like, actually, he's good. You shouldn't lose him.
Yeah. Yeah.
You think that's what happened? Do you think they actually called the people in Menlo called to your?
Oh, definitely. Yeah, definitely. I had good referrals. I had a good relationship and
did they know you were trying to transfer internally?
No, I don't think so.
So you think they got a call out of the blue to your equity research?
Yeah, it was I showed up on a Tuesday with an offer. I told my boss. He immediately called management. And then the next day, I got a call from recruiting that was we don't have a spot. We're going to try and figure this out. We'll let you know. And I think I had until the following Tuesday, I think, to give Lazard an answer. I think on the Friday, I got a call from recruiting. I was like, you've got an interview on Monday now at Menlo Park Banking. I went down on Monday. I want to say by end of day, I had an offer. And then I called Lazard and said, no, thanks. And then I started at Morgan Stanley 2 weeks later.
So, but tell me a little bit about the interview. For the lateral interview, what was it like? Were they grilling you on technicals at this point? Because you'd been working for 2 years.
Looking back, they really didn't. It was kind of softball. And I don't know why. Honestly, I have thought about that before. Why didn't they go me hard? I almost sort of feel
why weren't associates just grilling you? That's what I
don't know. I don't know. I think
maybe they were desperate for people.
I think honestly, I think it's one of 2 things. I think one is perhaps there was a lot of assumed knowledge that I knew how to do valuation analysis, which is and could crank in a model, which probably couldn't at the same level of the banking analyst. I know I couldn't at the same level of the existing banking analyst at that point in time. Mm-hmm. But 2 is I think there's actually this level of insecurity from bankers towards research people that they know more than you do about companies and industries. Mm-hmm. And so they perhaps weren't, comfortable getting into weeds with me about individual companies that I may know more than they do. And, my knowledge may have spanned, 2 more paragraphs than theirs, but, perhaps that was it.
I'm not surprised. I'm not surprised they did. My guess is the associates and VPs probably did want other people. And it was, do you know what I mean?
Yeah.
I mean, you guys are doing a ton of live deals, right?
Right. Right. It's like we've got an opportunity to increase budget. Like, sure,
Take it. Yeah, we don't want our analysts burning out.
Yeah, that's right.
So tell me, so you get there. Okay, so they give you the offer. You immediately say yes. I'll do it.
I actually didn't immediately say yes.
So tell me how that all went down, and tell me how your mind went through the commute.
Process. So Lazard had verbally told me that I would be guaranteed top bucket, which I don't know what that meant. I just know it meant that I'd be paid well. And so I went to the staffer at Morgan Stanley, who's still there and is a senior guy at the company at Morgan Stanley still. And I said, Lazard's offering me top bucket. Like, will you match that? And he was like, he thought about it for a second and he said, well, actually, I think he said, let me think about it. And then I think I talked to him again a day later, and he said, and I brought it up again. I said, like, are you willing to match that? And he said, let me ask you a question. If I don't give you that, you're not going to take this offer? And I said, no, I'll still take the offer. And it was a great way to put it back on me in a non-threatening way, because I was clearly being aggressive. Mm-hmm. And looking back, I should have been more prepared for him to say something like that. And it ended up working out fine, but like they just weren't going to guarantee me top bucket. Maybe they would have. Maybe maybe he respected the fact that I was being aggressive and he like wanted to see how much of a shark I really was. Yeah. But I just backed down when he pushed me, because I was like, yeah, no, that's
like, normal for a 25-year-old. Like what do you expect? You're not like some seasoned veteran negotiator. But okay, so that's fair. So they didn't guarantee you top bucket, but you still said, no, I'm going to take it. And so they said, okay, fine, you have an offer.
Yeah.
And then you accept. Tell me a little bit about. You have 2 weeks to prepare. What's going through your head in those 2 weeks? You're thinking, how am I going to commute down here? What do you have? Could you have a car? What's going on?
Yeah. So I immediately decided that I needed to move down to the peninsula. I was like, this is going to be, I need to be all in on this. Like my life's shutting down for the next year or two as I like do banking. And so I was committed to moving down to the peninsula. And I was already in the works of like trying to find a place. And so I'm trying to remember. I'm pretty sure I'd already found a place actually to move down to in Palo Alto before I started. If not, there was maybe like a week or two of commute. Actually, no, that's not right. I don't think I ever had to commute. I had that place locked down before I started.
And so it was close to the office, I hope.
Yeah, I mean, it was a 10-minute drive, and still that 10-minute was super painful at 3 a.m. But yeah.
And so you had a car.
You're right. I bought a car and I got a place in Palo Alto. That's right.
What was your rent back then? $3,000 a month or something crazy.
My rent in San Francisco was, I had a roommate. It was $2,500 a month, so $1,250 a person. This is in 2011. And my rent in Palo Alto, I think, was a little higher. Maybe it was like $15.
Which is kind of funny, right? Because you're not in the city.
Yeah. Right. But I was moving from a 2-bedroom split versus a 1-bedroom.
Yeah, fair. Okay, so you start, and tell me, what is the hardest thing about that transition? So within the first month, are you immediately fed to the sharks? Are you given any training? What was it like as a lateral internal?
Like given any training? There was not any training. I think what they did for the first month was, so I got really lucky that I also, my life's a story of luck. I was there right before the second years were about to transition out. And so there were a bunch of second years who were like, oh, here's this young kid, my life's kind of on cruise control. Why don't I help train him up? And so there were a bunch of guys in the bullpen who were willing to spend time with me. And I got to partner up with them. They were actually the lead analyst, and I was just sexually supporting them. So I remember that. And that was a really good way to learn.
Like a mini internship almost.
Yeah, exactly.
How long was that? Like a month?
Yeah, I want to say that was that was maybe
that's key. Month. That month is key.
Yeah. And
because you saw pace, you got to see how they worked, how fast they worked, how late they worked. Was it painful right off the bat? Were you staying late right away, just supporting them, or what was it like? Were you surprised at all? The reality.
I'm pretty sure it was. Yeah, I'm pretty sure it was. I mean, I wasn't the guy on anything, but I would everyone was sitting around until 10, 11 o'clock minimum, making sure we're all good. So, that was a change. And I remember, the stress I put on myself was just exorbitant. I remember I lost 5 pounds in the first month because I was you have so much nervous energy of oh my God, what am I supposed to do? I just know that I have to be here late, and people are going to tell me things to do whenever, wherever. I need to just be ready for impact. And I was just super stressed out, and probably took away from my learning capability because I was just so stressed. But
were you afraid there's a little bit of imposter syndrome there? Where you're like, they're
totally.
going to find,
yeah, totally. I was like, I don't belong here. I'm not as good as these kids. Absolutely.
So you're there. Tell me when you kind of started. Those kids left after a month or two. Tell me when you got put on your first live deal, you were the lead analyst, and how things progressed. And then we can kind of get into. We don't have too much longer, so I want to start getting into why the stint was about a year or so long, from what I can tell from your LinkedIn, or when the transition started happening, and when you started thinking.
Sure. So I want to say I started in July-ish. And so maybe after don't want to say around 2 months after when they brought in the new first year associates, I got staffed on this one deal. We did a public equity financing and debt financing for this company, Spansion. So I ended up doing a lot of, because I had done semis and clean tech in research, I got staffed on all these semis and clean tech deals in banking. And so I was working on this semis deal, and it was equity net financing. And the reality is there's a lot of M&A that got done in the group as well. But with equity net financing, you're doing a lot of little analysis. It's not I need to be able to build a 3-statement model. It's help think through the equity dilution of raising $100 million of equity. And so I wasn't thinking through complex M&A math and valuation math when I started, and building a lot of pretty biz dev pages, you might call them. And so the mathematical rigor wasn't that intense. The work was hard, but that's where it started, was with
the work was hard because of the hours, you mean?
The work was hard because of the hours, yeah. And I had
so you were doing more ECM. You were doing more ECM, DCM stuff?
No. I mean, you're thinking through, is it ECM stuff? Yeah, I guess so. Yeah, I mean, I guess any equity and debt financing is equity capital markets, debt capital market stuff. But I wasn't trying to think through the ECM part was really, hey, this company wants to raise $100 million. Tell me who the target investor should be, and what percentage of float is reasonable, versus we were trying to think through how's this impacting your corporate your corporate financials when doing this.
You mentioned an associate that you worked for. Was it an associate that had not been previously an analyst, was coming right out of MBA and didn't know what they were doing?
He did know what he was doing. He was very technical. He had not been an analyst. He was very technically bright. But he was just a workhorse, and he just wanted to crank pages. And so we would just do it over and over and over and over again until he thought it was perfect. It was really painful. And he was the main associate I worked for that whole first year at Morgan Stanley Banking.
So was that associate the reason you started looking elsewhere for the next job?
It was really possible. Yeah, absolutely. I mean, look, I candidly, I don't think anyone wants to be in banking any longer than they have to be, as an analyst. And so my initial plan / goal was I can just do 1 year of banking and I can try and get a PE or VC job. And that was the goal. Mm-hmm. I had to tread carefully because they hired me with the intention of that I would stick around for at least 2 years. Mm-hmm. So I, but I was if I find the right job, I'm going to jump.
So working those 80, 90, even 100-hour weeks, did you find any time to even talk with, you're close to VC land, right? In Sand Hill Road right there in Coast. I lived right there in Stanford too. I lived right there, right next to Stanford. So it's a beautiful area. So did you just start hitting people up on LinkedIn? How did you even get in touch with these VCs or PE funds out there?
Yeah, it's interesting. I fashioned myself as a strong, ambitious networker, but actually looking back, I don't think I really was doing that. I actually was pretty reliant on the recruiters because it seemed like they were the gateway, at least at the time, to like all of these great VC growth equity PE jobs. And so that's really what I was relying on.
So when did they call you? Did you reach out to them?
They reached out to me. I mean, I think, maybe a handful, I was like, hey, I'm this new analyst, like put me in your database too.
Yeah.
But it's pretty easy to get a hold of them.
And so did you just go start meeting them and trying to impress them with your with
Yeah,
how well
exactly.
spoken you're like, hey, I can get a job. I'm really well spoken about these industries and blah blah blah.
Yeah, that's right. And there's this whole dance you have to play, and I loathe having to work with outside recruiters, but and it was frustrating and I didn't like it. But yeah,
Khosla has to be one of the top VC jobs out there, though, right?
So interestingly enough, that was not sourced through a recruiter. So that was sourced through, there was a woman who was the head of equity capital markets and technology at the time, and she knew one of the partners at Khosla, and he had pinged her directly and said, are there any analysts that are interested? And Morgan Stanley at the time had this philosophy of like, we're going to help all of our analysts get jobs because they're going to go to the buy side and they're going to become our clients and they're going to like us. And so she had like blasted the analyst class and said, hey, Khosla is looking for an analyst this year. Anyone interested? And I was like, okay, that's me. They're, they were the top, probably the largest in terms of AUM, clean technology investor in the world. Obviously knew a lot about Vinod. At the time, I was really more interested in doing growth equity as an asset class. But I was like, man, am I going to be able to like thread the needle here between like clean tech and growth equity? At the time, there was rumblings of Silverwhite Craftworks starting up, which was going to be like this clean tech growth equity firm. And I was like, that's the ideal role. It was a brand new fund and like they weren't hiring like an associate at that point in time. And so I went all out on getting a Khosla job and I got it, but it wasn't through a recruiter.
What do you think the odds were of you actually landing that job? How many bankers were they probably interviewing for that? And why were they interviewing bankers? Why aren't they interviewing like consultants and stuff like that? Is that typically where they pull from?
So I think at least at the time, the thought was
there's not a lot of modeling in VC, right?
Yeah, I think they wanted a financial analyst to think through like dilution analysis,
term sheet, capital,
like how much do we value this, and like
yeah,
what's that going to look like, and like in the second, third, fourth round of financing, like
right,
how much should we put to work here?
Got it. So were they hiring you specifically not for specific industries, but almost to support people across that, like in doing more of that?
Yeah, it was just to be a general financial analyst in the firm. Yeah.
So tell me what those interviews were like. Theoretical thought, seeing how you think. Cases?
Yeah. So I think there, a lot about cultural fit. Can this person work with us? A lot about tell me about an experience in a deal you led and what was that like and what did you learn?
Okay.
And then in one of them it was pitch me an investment we should make right now and why.
How'd you prep for that?
I actually was not well prepared for that.
So what did you say? You just like regurgitated your coal pitch?
I had an idea at the time. On the fly, I thought of a.
You're telling me you didn't have a pitch ready, and you were able to wing it and still get the offer.
Is that right? I'm trying to think.
That's impressive if you did that.
I feel like maybe I had. It wasn't like a presentation. I think I had some notes written down.
Right, like you had been looking at. Did you trade on the side anyways?
Yeah. So so there was a private company. So I remember what I pitched. I pitched O-Power, which was private at the time, went public, and then got bought by SAP. So I did have some I think I had some like notes I had written down and studied about like why I thought it was a good company. I think the reality was like second and third order questions I was really weak on, and I it showed. But I got through.
But you got to the next round.
That's right.
And how many rounds were there? Like 3 or 4?
I basically had to interview with all the partners, which was, I don't know, 5, 6 of them at the time.
And so you had to go back each time to interview with one partner, or did they?
I think. Well, no, I might have interviewed with like 2 at a time once, but I probably went to the office like.
How many analysts? I mean, what do you think the odds are? So they're probably interviewing how many people? Like 30, 40 in that final round, and there's how many they're hiring? Like 2.
Yeah, maybe they only hired. I was the only one.
How do you get that job? Why do you think you got that job? You weren't even prepped for that thing. So like,
Yeah, I
it probably
think,
annoys a lot of people. Like, how do you get that close to VC job when you're not
yeah,
even like? Is it confidence? Is it just matter of factness? Is it because you're a little bit older than the other analysts?
I think, look, I had good experience in like being at Morgan Stanley Tech Banking. So like check the box of like, yeah, this guy can do financial
Brand,
analysis for
brand was
us,
strong. Yeah,
but brand was strong.
yeah,
I had done so I had taken this company Solzine public as an analyst, and so that was really important experience for me because they had done a bunch of clean tech, and
mm,
two of their biggest clean tech holdings at the time were Amyris and Kior. And so like I had industry relevance there and could think through that for
got it.
them.
Okay.
And so they still had other
You basically got to the okay. You basically the way I see it, you got to the right group, you did the
yeah,
right deals, and you were confident enough in the interviews where they're like, okay, this
yeah,
kid's sharp.
yeah, yeah.
Yeah.
But you're right. I mean, I definitely flailed at that uh, investment pitch. That wasn't great.
Do you feel like you were close to not getting the offer? Did you have any other offers at the same time,
I had any other offers at the same time?
or like
I
processes
don't
that
think
were
so.
no?
No, I don't think so. I think I had a final round at TCV, but I didn't get it.
Okay. So why? So you're there for a good 3 years. I know we don't have too much more time, so I
Yeah,
want to go forward. You were there for a
yeah,
good 3 years.
yeah,
Um, how is it different? More conceptual, less modeling,
yeah,
obviously less. What was the day to day like
yeah.
at Closer? And then why go leave all of that? Was it more like a 2 or 3 years and out type program, or was
That's
it?
right. Yeah,
Did
I
it?
mean,
Yeah.
they from the get go they were like, this is going to be a pre MBA program,
Hmm.
even though it wasn't like a program the same way folks go to I don't know TPG and there's a class of people and it's like very set specific dates start and end and
Hmm.
um, but yeah, it was a program. The day to day was very interesting. I got to sit in lots of investor pitches and hear learn what great companies were doing. I got to be super helpful with the portfolio. I got to do a lot of portfolio support, help companies with their next financing and think through their next financing. Um, I got to try and find new great ideas myself, which I probably didn't really get confident enough to do until much later in my time there. But try and build a thesis around an area and go and like have a few calls and present ideas to partners.
Mm.
Um, and so yeah, it was a really interesting learning experience. But I would say it was also incredibly hard. I don't know if I was really mature enough to like do the job at a very high level at that point in time, having just come from banking where you basically just sit in front of a computer and you're told what to do all day long,
Yeah.
to now go and like take your calling card and like figure out what investments we should make was a very tough transition. I don't think I was really even internalizing how difficult that transition was at the time.
It's super
Uh,
hard when you're told
it's
like when you
incredibly
go to the
hard.
bathroom to you're
Yeah,
told like
right,
when you go to the bathroom to like they don't tell you anything.
right.
They're just like,
So
here's your desk, go like
right,
tell us what to
yeah,
do.
yeah. And looking back, I would have done a lot of things differently. Um, and learned a lot from the experience, but like was a very, very, very tough transition to make. Like if you're going to go into my recommendations, you're going to go into venture straight out of banking. You should really do it in a place where you have like there's more infrastructure and more people around you. Like I see places like NEA hiring like a bunch of associates together every year. It's like, yeah, you need that support network of people to be like, you should do this, you shouldn't do this. I learned this was good, I learned this was bad,
Right.
and talk and communicate and like figure it out together.
And
Or even these
Khosla didn't have enough other associates or analysts around you
Yeah,
already.
it was a lot of partners, the top heavy firm, and so
Yeah.
I was trying to learn for myself and didn't even know what I was doing right or wrong, honestly.
Right.
Yeah,
So as you're getting into your third year there, what's going through your mind? Are you thinking MBA?
yeah,
What are the options and why did you go do your own business?
yeah. I never
Give
really
me the
wanted
quick
to
path
go.
on that too.
Yeah, sure. I never really wanted to go to business school. Maybe we can go. You can go a little longer, but I never really wanted to go to business school. I did it kind of as like a safety valve. I was like, I don't want a big hole in my resume. I don't want to just like leave and not know, and just sit around. So like, okay, why don't I go and take my GMAT and apply, like, which was a very, very rigorous process to do all that. I
Mhm.
did it. I ended up getting into Wharton, but not going.
Mhm.
Uh, and I was just like, man, I can probably use this capital to like do something better than sit in a classroom for 2 years. And like, I'm really not happy about the fact that I'm just going to blow all this savings on school. And by the way, I'm also seeing all these people in my network who like have made it to post MBA type venture growth equity jobs without a business school degree. Like man, that's a really expensive proposition then. And I wasn't convinced that it was going to be right for me and I would be happy about it. So I ended up applying, getting in, turning it down, and decided and I guess I had thought the options were like, I can use all this money to get a degree, or can use all this money to try and, build a company and create, something that's like a self-sustaining wealth creation tool. And I got really excited about that opportunity, and that's the path I ended up going down.
How'd you get that? What was the idea? And tell me how it went.
So
the realities of an entrepreneurship. Tell me.
Yeah, and hopefully I don't want to get into too dark hole, but you can pull me out if I get too deep.
No,
but
I like dark holes. Let's get let's explore them so people don't make the same mistakes and stuff.
So I was always interested in, if I was going to build a lifestyle business, I wanted to be in an area that was like more obscure, because I wanted to have a lifestyle business. Therefore, I didn't want venture to touch it. And I was worried I couldn't compete if I found something that was like bright and shiny, obvious in the consumer space. I was more interested in B2B, where you can find some really unique problem by digging and studying a space that was more protected, therefore, but also, didn't need to be a massive market if I found a good lifestyle business.
It's smart. I like that thesis. It's smart. Yeah. It's venture or growth equity is never going to touch this. So who's actually going to go after it and do a good job?
Right. And moreover, if you think about the economics of building a nice lifestyle business, if I had a business that had 5 or 10 million of top line and 50% EBITDA margins, and me and my one principal owned 50% of the company, I could draw a really nice cash flow every single year, versus any other job on the planet. And you think about a business that does $5 or $10 million of revenue, it's measly, it's small. So I should be able to rip that out of the universe. And so that was my feeling. And so I was looking around for different ideas, talking to lots of people.
Do you feel like you were swayed because you'd been seeing all these incredible founders coming through Khosla? You thought, oh, this is easy.
Yeah, totally. Company creation seemed very straightforward. Mm-hmm. And so I ended up, the story of me going after my first business idea was, I owned a car at the time I mentioned, and I got a piece of snail mail towards the end of my time at Khosla that said, your car warranty is about to elapse, buy an extended warranty. And I'm like, this is interesting. I'm going to look into this. So I call my dealer and they tell me yeah, actually your car warranty is about to run out. Would you like to buy extended warranty? And I said, okay, what's the price? Give me the details. Great. Yeah, I'm interested in buying it. And then I said, why don't I try and call a couple other dealers just to price compare? And I call one other dealer and it's they're selling a different product at a different price. And I'm like, that doesn't make sense. How does that work? And learn that you can buy a car extended warranty from any dealer. Doesn't have to be the infinity warranty. You can buy other extended warranties. And I was just blown. And I also realized that the piece of snail mail I got actually was not from my dealer. It was from some third-party broker that bought my information and realized that my warranty was about to run out. I was like, this is an inefficient market. Did some research and I realized, the car warranty premium market was tens of, I want to say it was over $10 billion a year just in America. I was like, wow, this is an inefficient, massive market. It's finance related. I'm a finance guy. I can figure this out. And so I, did some digging and did some learning for a month or two. I was like, you know what? I'm not ready to go and start a business right now. I need to keep learning, but I need to have a job. So I realized there was this company called Square Trade here in San Francisco. Mm-hmm. That was a large electronics warranty provider, private company backed by Bain Capital. I was like, I'm going to go work there and learn this industry before I build my business. So I went there. I left Khosla. I went and worked in the marketing department of Square Trade. I convinced them that I was now a marketing guy, and worked there. Learned a lot about the warranty business. On the side was sort of learning about the car warranty space, which, mm-hmm. by the way, Square Trade was not in there with the electronics warranty space, so it wasn't competitive. So spent a year there learning, and then after that year, went off and tried starting a car warranty brokerage business with my best friend from Penn, who was a Goldman private equity and then trader, and we tried starting this business together.
So he liked the idea.
He loved the idea. Yeah, I mean, we were working on it together for a year, just kicking around ideas. And the basic idea was the way warranties are bought and sold today primarily is they're sold at the dealership at the point of sale when you buy a new car, and you've got a car warranty finance person mm-hmm. that will bundle in the car warranty with the auto loan. So basically, as opposed to paying $300 a month for your car, you're paying $325 because it includes the car and the car warranty.
Right.
And the finance, the dealer is making usually like 100. It's 100% gross margin on that piece of paper. They don't have any underwriting costs. They're basically just, there's a third party warranty provider. They're saying, here, Patrick, you should buy this warranty. They sell it to you for $2,000 and the underwriting cost is $1,000. There's $1,000 of margin there, but there's no cost to the dealer. So I said to myself, I want to go and basically replicate those dealers' economics, but I can't compete with the dealer at the dealer. So I'm going to go and find those customers once they've left the dealership or before they've gotten to the dealership. There's all these different points where people are touching a car consumer and not trying to sell a warranty. I want to be that intermediary. And so came up with a list of examples of places where we could try and sell car warranties as a broker, basically just provide a markup on the underwriting cost. And for being there at the point of sale and creating that distribution strategy, I can make a lot of money. It turns out that selling car warranties is very complex. It's a complicated financial product. It's a large ASP. It's usually $2,000 to $3,000. And mostly people don't trust car warranty providers. And so we had a really hard time. We learned a lot, but I learned a lot about coming up with a business strategy, learning about a new market, figuring how to sell a product, figuring how to market a product. So I learned a lot. I didn't sell a lot. I didn't make any money off of this endeavor, but it was a really valuable experience. I subsequently went on to start a couple other companies as well in the software space. Decided that creating and I think a fundamental learning too about that process was I wanted to be in the B2B space, but really I was in the B2B2C space, being a car warranty broker, right? I was going to a third party, like, for example, we're trying to distribute through tire and wheel stores or auto mechanics. And I could convince those people, you should sell my warranty and you'll make money. And they said, okay, the consumer wants to buy it, they can buy it. But consumers weren't buying. And so I couldn't control my end sale, my end consumption. And so I was like, I like B2B. I need to just sell B2B, not B2B2C. And software, clearly as a business model has fantastic economics. And so I had my co-founder who was he could code, and so struck out and tried building a couple of different software businesses. One went kind of nowhere, but sold some product. Another one actually was pretty successful. That was actually in the shipping analytics space. And ultimately, after this sort of 3-4 year journey of Square Trade plus trying to start a couple of companies, I was like, man, I did all this work, everything to show for it. I've learned a lot, and people think I'm interesting and know some stuff, but my career is totally gone AWOL. And decided I needed to go back to working at a big public stable company to sort of reset my career. And was still passionate about software and technology. But I was like, I need to go work at the best branded software company I can at a big company where I can right-size my career, right-size my lifestyle, because obviously when you're an entrepreneur, your life is consumed by that. And so I ended up working for a guy I actually had worked for at Morgan Stanley Banking, who was running corporate development at ServiceNow. And he hired me as a deal lead to do M&A and venture investing at ServiceNow 3 years ago.
That's awesome. And so from the time that you decided, okay, I need to go change things up to that getting hired, how long was it? Was it pretty fast because you knew the guy, you just started talking?
It was actually super hard.
It was, okay.
It was that's something that I think is underappreciated about when you go off on your own, is getting back into the world can be really tough and painful because people want to know, why did you do what you just did? You're not off the street doing what if I want to hire a marketing person or a salesperson or a finance person, you're not that right now. And so it was hard. And plus I had done a bunch of random stuff for the last, 3-4 years. And so
why not just, you had to kind of put it on the resume so there wasn't a huge gap, but couldn't you just leave the Square Trade stuff up there? Is that what you did?
Yeah. I did. I worked at Square Trade for a year, but then I tried.
Oh, it was only a year. Okay. But then you did your own thing.
Years. Yeah. So it was what did you just do? That's a really cool story, but you don't have much to show for it. And I don't really know what to make of that experience, but you were an analyst 7 years ago in finance, that's cool. And I was older, right? So it's they don't want to give me a really junior job because I'm older and have more years of experience. So it was hard. And so I knew I wanted to work at ServiceNow. It took several months actually. I was doing consulting for another company for a time just to like get cash flow. But I was really committed to like, I'm not going to do another high risk, unstable startup type thing. I need to go work at a big stable company, and I held out for it. I ended up getting 2 offers at the same time. One was at pre-IPO private software company doing kind of a similar job in corporate development and special projects, working for the COO, and then this job, which was working for the head of corporate development, VP of corporate development, and ended up deciding to go to ServiceNow because I was like, I'm committed to finding a more stable job.
Great. We only have a couple more minutes. Tell me how you made the transition from head of corp dev to now strategic finance, and why you did that.
Yeah. So I've been at ServiceNow for 3 years, and in those 3 years, I went from being a deal lead to being the head of corporate development, which was a fantastic experience. I've learned a lot about like doing deals, communicating inside of a large organization, executing deals inside of a large organization, and it's a fantastic role. And for anyone in investment banking who's interested in corporate development, I speak very highly of the opportunity. It's super fun. It's exciting. You have really important execution and sort of love within the company for like doing what you do, and you get to interact with very senior people. So all good. I did it for 3 years, and I was like, man, I don't want to be doing this for the next 10 years of my life. And I've seen a lot of people go from being head of corp dev, or even from my previous banking days, being senior bankers to being in finance. And I love being at ServiceNow, and I want to stick around the hoop at ServiceNow. But realized that being a senior financial person, CFO, VP of finance, SVP of finance kind of person would have much more broader scope long term. Still get to have the experience of like making decisions off of financial data. Being thought of as a finance person making financial decisions. But I thought the breadth of opportunity would be much bigger going into the finance world, and so moved over to the finance team just a few months ago, and now leading sales and marketing finance at the company, where I manage all of top line forecasting and recording, so revenue and subscription billings, and then all of our sales and marketing budget.
Great. I got to let you go soon, but any
Cool.
final words of wisdom from that? Yeah. Thank you for sharing your story.
Yeah.
Final words of wisdom before we call it.
Yeah. Life stuff not always straight, as you can tell, and it's important that you learn from your mistakes, learn from your opportunities. I think entrepreneurship can be a wonderful thing. It's also incredibly challenging. I think like working at really big companies, I think it can be really fun and exciting too. And like there's a lot of opportunity I think that's underappreciated about working at big public companies, where, by the way, people want to work at pre-IPO companies to see their equity rip. ServiceNow in the 3 years I've been there is up 3 times. So you can work at big public companies and get good equity returns.
Still do well.
Yeah.
If you join the right horse, right?
That's right. That's right.
Great. Well, Matt, thanks so much for taking the time to join and share your story. Really appreciate it.
Thanks so much for having me, Patrick.
And thanks to you, my listeners at Wall Street Oasis. If you have any suggestions whatsoever, please don't hesitate to send them my way, Patrick@wallstreetoasis.com. Until next time.